FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today, well, it's Monday, October 14th. Shout out to my daughter, Chelsea. It's her birthday, and I remembered it this time. I actually sent her a text in the morning, so I'm getting better with age. Well, some things don't get better with age, like booms. Busts, too. Busts actually do get better with age. The longer a bust goes on, the sooner the boom is about to return, but the longer a boom goes on, the sooner the bust is about to occur. There's probably a bust taking place right now in Miami Beach real estate, which means high-priced trophy real estate, and that's probably happening as well in the People's Republics of California and New York. Well, we've got a new guest here for you, but first, what's your opinion of the real estate market? Are we heading for a bust, and where is it going to hurt the most? Just email me, kl@kerrylutz.com. Well, we got a person here who runs a hedge fund by the name of Praetorian, and he's got a website, adventuresincapitalism.com. His name is Harris Kuppy Kupperman. We'll call him Kuppy for short, since we're friends now. Kuppy, it's a pleasure to have you on the show. I've been reading your articles, and you seem to be almost a bit of a doomer out there. What I'm reading.
Well, thanks for having me on the show, Kerry. I'm not sure I'm a doomer. I'm actually an optimist, and I've made a lot of money over the years buying rapidly growing companies. It's just a question of right now things don't look so good, and you got to go where the opportunities are, and you got to analyze the facts. And if the facts say that it's not so good, then it's not so good.
Mm-hmm. And I'm inclined to agree. I just feel like the past 10 years have kind of been an illusion of printed money. And, there's no greater intoxicant in the world than printed money. It's better than cannabis. It's better than oxy or opiates. Printed money just makes the world feel good. But eventually, that roller coaster, that merry-go-round, it stops, and it doesn't just stop. Like if you're ready for the merry-go-round or the roller coaster to stop and come to a jolting halt, that's fine. But the way these markets work is nobody is ever ready. You never know when that merry-go-round is just going to stop and then go reverse right away, and you're thrown off. The merry-go-round, picking up the pieces.
Yeah, I mean, I could see that completely. And it's part of why you have to keep looking at the information and analyzing the facts and trying to figure out when the story is going to change. And I think we're at an inflection in the narrative here.
Mm-hmm. But then again, like I always knew that Trump was going to pull a rabbit out of the hat, another rabbit. And that rabbit was this stupendous trade deal with China. Where they basically
there's no trade deal. Yeah. They have nothing. Him and the head negotiator can't even decide what to order for lunch.
Mm-hmm. Well, Chinese food's always good. At least if you're in New York, and maybe DC isn't bad. In Florida here, Chinese food's really not an option.
Yeah, there's no Chinese food down here. And no, I think those guys, they're doing this for show, but I don't see a deal coming anytime soon. Or maybe there's a minor deal, They'll buy some soybeans because their people are hungry.
Because they got to have them.
And
right?
We won't roll forward some tariffs. It's not really much of a change in the status quo. In the end, all the existing tariffs are in place. And, I think this was kind of a face saver for both sides. And they'll probably take a couple more months to paper it up and declare victory. But, nothing's really changed. And you have these tariffs in place, and, global economy is slowing quite rapidly. Cass Freight Index came out today and said that everything's comping negative again. Air freight's down, rail freight's down, truck freight's down. If stuff's not moving around, you don't have an economy. I tend to think those data points are more accurate than government data points, just because governments lie to you.
Yeah,
everything I see seems to say that things aren't so good.
You think governments lie, huh? Who would ever believe that governments lie? Oh, man, what's the world coming to? What is the world coming to? So, of course, they lie for their own advantage, to advance their own agenda, if you will. they do whatever they have to. They're basically pushing a narrative. Everyone's got their narrative, right?
Yeah. And I guess, Trump's narrative is that things are good and, don't worry, he's got it under control. And we're 10 years into an economic cycle, and usually these things don't make it 10 years. And I'm not sure whose fault it is, but the economy is slowing.
Yeah, it has to slow. I mean, look, have they done anything to repeal the business cycle realistically? Is the business cycle dead? They always like to say it's dead, but it always rears its ugly head in the end, doesn't it?
Right. I mean, they've cut taxes, which is very stimulative. They've done, pretty crazy amounts of monetary stimulus, and it's kind of extended the cycle a lot longer than it was meant to go. I don't know exactly what ends the cycle finally, but my hunch is that it's inflation picking up, which will almost force the monetary side to ease off a bit.
You think?
I think we're seeing that in bonds. We're seeing that in a lot of indicators that are tied to inflation.
Yeah. So inflation. I thought they had totally gotten rid of inflation. That inflation was dead, but maybe not so much.
Not so much. You think about this very, very big picture, and this is kind of my view on inflation. The last 30 years was disinflationary because we had globalism, which meant that every product produced went to the cheapest place to produce it with massive supply chains. And this was massively deflationary in almost every asset class. Well, if globalism is going in reverse now due to trade wars and tariffs and sanctions and everything else, then if globalism is disinflationary, shouldn't the opposite be inflationary? It's just kind of a simple inversion, right?
Yeah, I would think. I mean, the tree does not grow to the sky anyway, right? So,
right.
So it kind of has to at some point.
Right. And I mean, it has been inflationary in many sectors. Look at all the sectors with a constricted supply. So whether it's, treasury bonds because the government keeps buying them all, or, publicly traded securities because buybacks keep restricting the supply, or housing stock because local governments have been restricting supply. Whenever you take a product and you reduce the supply artificially, what ends up happening is that the laws of supply and demand don't react as they traditionally do. And you end up with a shortage and you end up with inflation against, our monetary base being the dollar. And we've actually had quite a lot of inflation. It's just been in financial assets this cycle.
Mm-hmm. Yeah. So also it's in the things you need, not so much the things you want, right? Like car insurance, health insurance, college expenses, all those things have been heading higher with no rest at all.
Those things are mostly artificially constricted too, whether it's education, there's only so many, top tier universities you can go to, and each year more people want to go. You just kind of look at these medical, healthcare, like it's a sort of rigged Byzantine system. So of course you don't have normal pricing functions. Anything where you restrict the supply, you end up with more of it.
Yes, of course. Just like housing, education, healthcare. Healthcare has been artificially restricted because you got these licensure regs that really unfairly penalize people that want to get into it and protect those who are already there, right?
Right. So then you don't end up with a normal supply demand balance that reprices.
Exactly. So. And then, the business cycle is going to occur because under the classical theory, you're looking at an economy, speculation booms. You have excessive speculation, and a lot of it's brought on by lower interest rates because projects appear profitable and viable when they're not really viable, but for the low interest rates, the cheap money, and then the cost of money goes up, the cost of all these inputs goes up, and then you wind up with inflation, and then usually you have higher interest rates. But this time, we're not getting higher interest rates, are we?
We might be. I kind of think we're nearer to the top than the bottom of the bond cycle. And I wouldn't be surprised if interest rates, especially on the long end where the government has less control, start inching up. If you look at it from charts, it does seem like we've had a failing rally the last week or two. And, I tend to think interest rates are going higher, actually. Maybe that's a contrarian view. The world's worried about deflation. But, if it turns out inflation is the thing they should be worried about, then no one's positioned.
Yeah. And so what about what's been happening in the repo market? You got an opinion on that?
I don't really have an opinion on the inner workings of the repo market. All I know is that it was broken for a while. They printed a whole lot of money, and it doesn't seem broken right now.
Yeah.
But printing money isn't always the solution to every problem.
Yeah.
It's just, a man with a hammer, every problem's a nail, right?
Yeah. Well, the Fed is all about printing money, right? That's the only trick they have in the book.
But we've seen this in other countries where it just doesn't seem to work. Japan, it hasn't worked. Europe, it hasn't worked. I think in America, you're going to reach the law of diminishing returns. We probably already have. And I think a lot of that is because you can print all the money you want. It doesn't end up, pushing the economy. Eventually, you need monetary stimulus too. And I think when you see monetary stimulus along with fiscal stimulus, you see inflation. Don't forget, monetary stimulus is the one that's the real crowd pleasers in democracies because you just hand free stuff out to people.
Helicopter money. Yep.
Yeah. But it also creates a lot of jobs. You start doing bridges and tunnels to nowhere. It's the sort of stuff that politicians get reelected over. Monetary stimulus is something that helps a couple bankers. That's the sort of stuff that politicians kind of hide behind.
Oh, very true. Totally true. So the first article you wrote that caught my eye was the upcoming, or existing, kind of hidden, stealthy real estate crash taking place with high-priced Miami Beach real estate. Can you summarize exactly what's happening in this market?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex Trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Yeah, sure. So I've been in South Beach 15 years now. And so this is now my second full cycle here. And I watched a third cycle when I was in high school. And what we're seeing really is that prices are coming off. If you think of Miami, it's kind of a funny market because especially on the high end, a lot of the market is dominated by foreigners. So you have, your Venezuelans, your Argentines, your Russians. If you follow the news, those guys aren't doing so well. So, you don't see a lot of escape capital coming here. If anything, you're seeing guys trying to redeem their escape capital. But when you look at Miami historically, it seems to lead other markets by 3, 6, 12 months, whatever it is. I remember sitting here in 2006 and saying, wow, Miami's gone no bid. And everyone's telling me how great the U.S. property markets are.
Yeah.
So I think we're seeing a similar thing right now where on one end, the demand side, you see all these foreign guys who are no longer buyers, they're actually sellers. On the supply side, the economics of condo development are just outstanding. You come into something, you build it, someone else puts up the money because you do pre-sales. So you put none of your capital at risk, and you're often making, 2-3 times your capital using someone else's capital, mind you. So 2-3 times development costs. So let's say it's going to cost you $300 a foot to build this. You're going to sell it at $600 to $900 a foot, and someone is funding the entire thing or 2/3 of it, whatever it is. So when things go well and developer margins expand, guys just go crazy building. Last cycle, what they built a lot of, and it's across the bridge on the mainland, not in South Beach, they built a lot of kind of upper middle class homes. There's a view that you'd see a lot of people coming down here from the Northeast, and they would need a 2-bedroom, 1,500 square foot sort of place. And what happened is when it all crashed, eventually those units got absorbed and it fixed itself. This cycle, they're building 5,000 square foot things with 7 patios and built-in jacuzzi. And these are like $5 million things. And
I'm a squatter. I could be a squatter in one of those places. Maybe you could write a little insider's guide to squatting in these real expensive places. I'm sure you
couldn't pay the property taxes. You go broke.
Yeah, well, that's the squatting. You don't pay for anything. You just live there till they toss you, right?
Give it about 6 more months.
Yeah, well, that's what we had. I mean, you had in Delray and Boca mansions on the beach, and you had squatters there. They had been foreclosed, and they were empty. They didn't last that long because the neighbors kind of noticed this stuff and are apt to complain. I don't know, they're real buzzkills when it comes to this stuff. But you know what I'm saying. It's not good
for property values.
Yeah, definitely. There goes the neighborhood.
Right.
So you've got these huge places, and nobody really can afford to pay the taxes. Even the taxes, what are they? 2% in
2%
Miami
taxes.
So
condo
10 million.
Fees,
yeah.
Condo fees are about $1.25 a foot.
Uh-huh.
You got maintenance. We get whacked by a hurricane every 10 years, so that's not cheap for insurance. It's an expensive place to hold on to a property. So if you think of Miami property, when it's going up, every 2 years, people cash out refi, and the money they refi is used to carry the property in terms of paying all these expenses. I mean, a property here, has a negative carry. Even if you rent it out, you're going to lose a few percent a year. Right. So you have to do that cash out refi. So kind of like a shark, if it's not going higher, it's going lower because it kind of just like strangles itself. And so for the last 2 years, property prices have been pretty stable here. And then starting about a year ago, they started going lower. And you don't really know they're going lower because all of a sudden you stop seeing transactions. So when you look at it from an inventory standpoint now, in most of the major markets here, we're looking at 24 to 36 months inventory, which for people who are not in the property market, that's kind of a crazy number. And that doesn't include the shadow inventory of new units coming on the market. And there's a lot of new developer supply coming too. And what that's doing is it's starting to pressure pricing. And remember, if you're in a condo building, the last trade done sets the price for your entire building. So if you have one trade done down 20%, everyone's down 20%, which means that a guy who wants to buy a unit can't go to the bank and use the old price deck. He has to use the new lower price deck in his valuation, which means he has less mortgage capacity, which means that he can't now buy the unit at the old price. So everyone's pricing deck goes down. And that's what we're starting to see happen. Well, actually, we're starting to see it just go no bid because buyers ain't stupid and they know the prices are dropping. And it's not like last time where they took interest rates down and they fixed the problem. As we talked about just a few minutes ago, it's very expensive to hold a Miami property. And so interest rates as a percentage of your interest payments and your amortization payments as a percentage of your total costs have become a smaller and smaller piece. So they could take, interest rates to zero. I don't think a lot of these properties are cash flow positive anymore. So it doesn't really matter how much they push on interest rates because the other pieces, property tax, insurance, condo fees, those are all going up at inflation or even faster than inflation.
Yeah, very true. And you got to insure it. Like you said, all the fees associated with it. Hey, even you're paying for parking fees for the for the valet to park your car. All of that goes up, and a lot of them have like restaurants that are there, captive restaurants, and you have a minimum that you have to make every month, and that goes up, and it's kind of a cascading effect. Well, so that's the upper end of the market. But what about the middle end? People have to live someplace, and right now, the way rates are, it's often cheaper to buy a place than it is to rent it. Although I might argue that you're renting the money from the bank, so you're effectively renting it. You don't really own it till it's your name on the deed, and even then, you got to pay your taxes, or the government will take it away from you.
Right. Well, we haven't seen the low end, waterfall yet. There's been some pressure on the low end, but we haven't seen it drop. My sense is that what you see on the high end eventually trickles down to the low end. And if some part of the stack gets hit, the whole stack gets hit. I have to think that the mid end starts getting hit pretty soon because the same factors in play on the high end or even the high mid end it matters to the mid end too. If it's not going up, it's going down. It's the shark theory.
Right. So, but demand fundamentals on the lower end are, are much more, as long as they don't get too far ahead of the market and people can still qualify, they can sell their place in New York or wherever it is, and they can, buy a place for half the price or less here, and their cost of living goes way down. And right, it's
we've been seeing that. That's why Florida is one of the fastest growing states there is.
Yeah,
people keep leaving other more expensive places. They're coming down here, and obviously, that's put a bit into the market, and it's going to keep a bit into the market. But when you come down here, part of the trade off is that there's less good jobs that pay well. Yeah. And so from an affordability standpoint, in terms of, house price to average income down here, the affordability kind of blows out. So, you can only still afford so much house.
Yeah.
And don't forget, they're building a whole lot of supply.
Oh, that's very true. The supply here greater than anywhere. And it does look like it's getting a bit ahead of itself. But still overall, maybe compared to Miami, not so bad. And you do have baby boomer generation, of which I'm a member. They're still retiring at a pretty prodigious rate. And it's very possible they still have equity in their homes in the north and can take out a home equity line of credit, switch houses, sell it off when the market strengthens, whatever,
I have a lot of friends in the north that want to come down here and save on their property taxes, and they literally can't find anyone to buy their McMansions. Mm-hmm. You have these homes. I'm from Long Island. You have these $1, $2, $3 million homes, and there's no natural buyer for these things anymore because one, no one wants to live in Long Island, but at the same time, no one needs a 5,000-foot mansion with all the property taxes associated with it. So I just don't know if there is a bid for these guys to actually cash out on their places.
Yeah. That is a good question, and I don't really have the answer for that either. But at least some people, like retired civil servants, etc., if you want to call them, government workers, government non-workers. I mean, that's what we call them. Hey, you look at them and you say, well, they can, even if they don't sell the house for as much as they'd like, they can still get something there, and they're still going to be ahead. They've got a generous taxpayer-funded pension, and they can move here. It's still within their reach, I guess is what I'm saying.
And they probably will keep moving here because trends in motion stay in motion. And the last 100 years, the trend has been people coming down here.
As long as there's air conditioning, as long as we don't have blackouts like Florida, and our utility here is way far superior to almost any utility, publicly traded utility in the country, FPL, by far one of the best. Their prices have been going down, and that's before factoring in inflation. So prices are way down in energy because consumption's going up, physical plants locked in place, etc. So, it's really interesting. But like you say, overall, the demand gets set at the margin on the top and the margin on the bottom, right?
Right. And so I don't have a super strong view on the lower mid end here, though I tend to think that if you have a recession, everyone gets hit. Yep. And, if you had too much supply, everyone gets hit. But I'm absolutely convinced that the high end here, 1 million plus is in a world of pain. I have friends in that world, and they just keep telling me stories.
Like you were mentioning about the funds, right? The funds we talked about.
Right. I have a friend who runs a very large hard money lending fund. They've been very successful for a very long time down here. They basically lend against people who can't qualify for a traditional mortgage. They lend for guys who go over budget on a development, or guys that don't want to take the time to get a traditional bank loan because they only need the money for a short period of time. They charge high interest rates, usually above 1% a month. But these are people that are willing to pay those rates because they are you thinking of it kind of as a bridge to something else? Yeah. They're saying, I want to buy this house and I don't have the money today, but in 6 months I will have the money. So it's okay. I'll just pay this for 6 months. So anyway, my friend's been doing this for a long time. He's been very, very successful. And what he noticed about 6 months ago was that prices started dropping. They kind of pulled back a little on his lending. But then what he noticed about 3 months ago is that the people who used to take him out of loans, he's not in the business of repossessing properties. There's other guys that do that. They lend to own. Right. And, you can also often buy properties at large discounts to fair market if you have a lend to own strategy. So he would traditionally, when a mortgage went into default or a loan went into default, he would traditionally sell that off or basically convince the borrower to refinance with someone else and get it off his books. Mm-hmm. And what's happened in the last few months is that all those guys that used to buy this sort of inventory, they're all jammed up too, because they've been repossessing the properties, but they can't then liquidate the properties. There's just no buyer at anywhere near the prices. And I gave an example in my blog. I forgot the exact numbers, but my buddy lent on a pre-sale. And the pre-sale, has been a very lucrative place to lend because let's say it's a $2 million purchase. And so you put down $1 million in the pre-sale immediately, and then there's progress payments. So my friend would cover the cost of the progress payments because he figures on a $2 million development, the guy already has $1 million cash down. It's a 50 LTV at worst. And the property usually appreciates after the pre-sale is done. So you're coming into this at a very low LTV, and it's just been a bread and butter trade for him. Mm-hmm. And suddenly, this property that has $2 million in total payments needed against it, and the guy's already put down $1 million. It's time to put down the next payment, and my friend's wondering what he should do because the property is probably worth $800 finished now. Like there's negative equity. Yeah. And that's how far the marks are dropping, that you could be down 50, 60% and still no bid. This is 08 stuff and no one's really talking about it. And that's kind of why he wanted to flag it to me, because how many guys want a $2.5 million apartment where you don't have water access, you're not on the beach, you're inland. It's just one of these things that was built for some guy probably in Brazil or something who'd never been here to Miami and didn't know what he was buying and bought it based on the sales document, but there's just no demand for that product.
I know. That's a real concern here. So it's sinking these things, and the collateral, as it turned out, they thought they were over collateralized, and now they found out they're under collateralized, right?
Right. That's what my friend is learning. He figured, if this guy put $1 million in, he's probably going to put the other $1 million down when it's done because he's already $1 million in. And this guy's just saying, well, maybe I should walk from it. It's worth less. It has no equity to him right now. Why should he put another $1 million down? Mm-hmm. And my friend's kind of stuck with it. And you can see this replicated times, tens of thousands of units down here because there's just so much supply that no one needs.
Yeah, that's the thing, because land use regulations in Florida are much less rigorous. You want to do a major development, it'll take you 10 years to get approved in Palm Beach County. But you go up to Indian River County, you go to Lee County, it's a lot easier. And a lot of these projects that are coming online now have been in the works for 10, 15 years. So as a result, the supply is never ending. So we all know when you have inexhaustible supply and exhaustible demand, we know what's going to happen here. Hey, just one other final thing, taking it back to the macro scene. So we had news of a huge trade deal between the U.S. and China over the weekend. You're a little skeptical of that one, eh?
Yeah, I don't think these guys can agree on anything. I guess my joke around the office here is that Trump and the Chinese negotiator can't even agree on what to order for lunch. I think they're pretty far apart still, and they might come to a short-term agreement on some things. China probably wants to have more soybeans. When people go hungry, you have revolutions, and America said we won't increase tariffs. It's kind of one of these face savers that everyone wins. But Meanwhile, you have the Hong Kong protests where America is clearly supportive of Hong Kong. You have all sorts of IP issues and telecom issues. I just don't think this thing is solvable. I think the world's fracturing into two blocks, and Trump keeps using every little data point to tweet the market higher. But I think it's just a fake narrative, and eventually the market's going to realize that and roll over.
Mm-hmm. So it's a fake narrative? You think they're trying to pull the wool over our eyes?
I would think so. I mean, even if they agree to export some soybeans in exchange for not increasing tariffs, which is basically the only thing on the table right now. I mean, how does that change the fact that the global economy is slowing rapidly? I don't think it fixes anything. And I really do think that America and China are moving further apart.
You think so?
No matter how much Trump talks about his relationship with Xi.
Mm-hmm. So you think we're in this decoupling phase where we're just going to say the heck with China?
Yeah, I think we're in a bipolar world, and we're going to move away, and they're going to move away from us. And I'm not sure we're going to become enemies or not, but I think we're going to move away.
Maybe we'll be frenemies, huh?
Well, there's very little that both political parties seem to agree on, except for they don't like China suddenly.
Yeah.
And I think Trump's the one who started that trend. But he's now can't walk it backwards. He opened up Pandora's box here.
Yeah, well, he had some probably legitimate reasons for doing so. We don't need to debate them, but the trade relationship became seriously unbalanced. And
of course,
at some point, you got to pay the piper here, right?
Right, and I think it's moved on beyond just trade stuff, and I just don't think they're going to be able to ever get things back to where they were. That's my personal opinion.
You could well be right. I don't doubt it. I don't doubt it for a minute. It sounds like things are past the point of no return. But I guess we're going to find out more about that in the coming weeks and months ahead. Just wanted to get your take on it. So again, just tell us website where we find your work. And usually you write articles, once a week or so?
Yeah, about once a week. You can sign up for updates. I write at Adventures in Capitalism. All right. And I have a hedge fund called Praetorian. But if you want to find my work, Adventures in Capitalism.
And there's a link to it in the show notes. Hey, Kuppy, really appreciate it. Since we're buddies now, I feel like I can call you Kuppy. Really appreciate you coming on. And we'll definitely have you back on again. If you notice anything dramatic in these markets, just tell us and we'll get you on right away. And hey, just as a reference for everyone else, what do you think about real estate? You think it's not just Miami, it's going down all over? What's your opinion? Let us know. Email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Kuppy, been a pleasure. Thank you so much, and we'll talk to you again real soon.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.